Hi Jaspreet, I'm a 24-year-old guy with a simple job. If you were me, what would you do to create wealth? Can you make a video about what to do, what to buy, where to invest? Thank you. Sure, let me grab my whiteboard. I'm going to break this down into 5 steps. Each one of these is going to layer on top of one of the other, and it doesn't matter if you're 24 or 64, you're working a simple job or a complex job, the process is the exact same on how you can build wealth. And it all starts with you earning some money. Now, there's a lot of ways to earn money. You can make money from your job, you make money from your side hustle, your freelancing gig, you can make money from your own business. But the second thing, this is where things really start to get important now, is as you start to make some money, you don't spend all of your money. In fact, you want to spend as little as possible if you're starting your wealth journey. And this part is not fun, unless you make it fun. But this part is tough for the majority of people for a couple of reasons. The first reason is the financial reason, because if you're not spending money, that means you might have to say no to a vacation, eating out at a restaurant, or buying a new car. But the second part is non-financial. The reason why this is so difficult non-financially is because when people see you go from driving a BMW to driving a Toyota Corolla, when they see you eating at Benihana's to now eating at home, when they see you from going to Cancun every 6 months to now not, they think something's wrong with you. They think you lost your mind, and they think something's wrong with your money or your bank account as well. And so this is where a lot of people get stressed, because many times we want to spend money so we can get the validation, right? I got the nice stuff, I got the Gucci, I got the nice car, I got the big home because I made it. I worked so hard in school, I got a good job, and I'm making good money, so I got to look like I'm making good money. But that's one of the biggest traps now to ever building wealth, because the reality is, if you make money and then you give your money to everybody else, you make money, you give your money to Amazon because you're shopping on Amazon. You give your money to Gucci, you give your money to Rolex, you give your money to BMW, or you're just giving your money to Kroger and your other whatever needs you have, your landlord, your banker. Well, now you have no money left over for yourself. When you spend money there, it's making somebody else rich. When you keep paying so much money to your landlord or your banker, they're getting rich. When you pay so much money to Amazon, Amazon's getting rich. When you pay so much money to Kroger or Walmart, they're getting rich. When you pay so much money to BMW, BMW is getting rich. But in order for you to get rich, you got to spend that money on yourself. And when I say on yourself, I don't mean going out and buying a new Gucci purse or a Gucci belt. I mean in investments. But in order for you to do that, that means you cannot spend all of your money. And this is hard because that's going to require you to make financial sacrifices, and that's going to require you to make the psychological sacrifices. And this is hard because that means you are earning money and now you don't get to enjoy it. And that's why this part is so hard. But then when you don't spend all of your money, what you're going to do is you're going to take some of the money that you don't spend and you're going to buy assets. These are things that you purchase for the sole reason of making money. When you buy a car, you're either buying it because you need a vehicle to get to and from work, or you're buying it because you want to show off. But when you buy an investment, you're not buying it to show off. You're not buying it for a use. You're buying it because it's going to put some money in your pocket. And this is so hard because you can't show it off. Now your question here is, well, Jaspreet, what assets should I be buying? Well, there are 3 big assets that have built more wealth than anything else over the last century. What are those assets? Those are number 1, stocks. Number 2, real estate, not your home that you live in, but a rental property. And number 3 is business, whether it's your business or you're investing in other business ideas. What you want to do now is you take the money you don't spend and you want to shove that money here. As much money as possible, you want to put that here. And yes, this business can also be your own business idea. Now you might ask, well, Jaspreet, what do I actually buy? Because I don't know what to do. I've never invested my money before. And this is where I want you to start by dipping your toes in the water, because a big mistake that a lot of people make is they assume that investing has to be this big, daunting thing. I need $10,000. I need $100,000 to go out and invest. But that's really not how it works. And that's really not how the majority of people build wealth. If you want to build $1 million worth of wealth, you don't need to start with $10,000. What you need to do is start in smaller, bite-sized pieces. If you can start by investing $100 a month, you're probably not going to be investing in real estate unless you're looking for crowd-funded platforms on the internet, but you're not going to go out and buy a property. But you can start in the stock market. So if you have $100 a month, well, now what you can do, you set up an automatic system that just pulls money out of your bank account and automatically invests this money into the stock market. Now you're going to say, well, what stock should I buy? And this is where then people will say, well, should I buy Apple? Should I buy Tesla? Should I buy Nvidia? And again, you got to know yourself and you got to know your research. The majority of people should not be going out and buying these companies because the majority of people have no idea what they're doing. Instead, what you can do is you can just invest your money into the stock market. And you might say, well, what does that mean, Jaspreet? Let me give you a few examples. And no, I am not telling you what to invest in, but if you go out and you invest in the ticker symbol, VTI, this is an ETF, it's a fund. If you go out and you invest in this VTI fund, and you can do it on pretty much any stock brokerage, you are investing in the total stock market. So now instead of investing in one company or two companies, you're investing in the thousands of companies in the stock market. If the stock market goes up on average, you make money. If it goes down, you lose money. But technically speaking, you don't actually make money or lose money until you sell. It's just on paper. But maybe you want to be a little bit more granular. Maybe you just want to invest in the top 500 companies in the stock market. Well, that's known as the S&P 500. If you wanted to do that, you can invest in something like SPY. SPY is a fund that gives you exposure to the 500 largest companies in the stock market. Maybe you want to invest in the NASDAQ. You might have heard people talking about the NASDAQ before. QQQ is an ETF that gives you exposure to the NASDAQ. There are these types of funds, index funds, ETFs, mutual funds, for anything that you can imagine, whether it's a broad index of the general stock market, whether it's healthcare stocks, whether it's AI stocks, whether it's technology stocks, whether it's real estate stocks, whether it's international stocks, whether it's dividend-paying stocks. And now you don't have to go out and find the perfect company. You just find a few funds that you want to invest in, and then you set a set it and forget it system. Every month, every 2 weeks, every 1 week, money gets pulled out of your checking account and it's just automatically invested. Now, you don't even have to worry about doing all the research here. You just find a few funds, you get a good brokerage, and you just set it and forget it. If you're looking for what brokerage to use, you can check out some partner brokerages down in the description. But then you can get even more nitty-gritty. You can say, I want to be a little bit more involved. I want to study what's happening in the markets. I want to study the financial trends. I want to build my financial education. I want to invest in real estate. I want to invest in small businesses. I want to invest in individual companies. Great. But that's going to be another layer of financial education, right? You don't have to start by just making the perfect investment, but you got to just get started. That's where the wealth is built. And if you want to get more involved, it helps by starting to just understand what's happening in the financial markets. This is one of the reasons why I created Market Briefs, which is a free financial newsletter where my team is breaking down what's happening in the financial markets, things like the economy and stocks and housing and crypto and the global economy. We break it down into simple English so anybody can understand. You can read it in less than 5 minutes every morning, and it's completely free. So if you haven't joined Market Briefs yet and you want to join for free, I got that link for you down in the description below. The fourth step to building real wealth here, after you start building a financial system where you're not spending all of your money and now you're working to invest some of your money, is now you got to work to earn more money. And notice that I say this here, not here. Because the mistake that so many people make, and I've seen this so many times, is people will work to earn more money so they can drive a faster car. And now what are you doing? You're working harder to make BMW richer. But I want you to make more money so you can make yourself richer. You might have heard me talk about the decade of sacrifice. This is what it's all about, where you spend the 10 years working hard to spend less and earn more so you have more money to invest and buy assets, because this is what is going to make you wealthy. This is what's going to allow you to buy all the dumb and expensive and nice things that you want without having to worry about the price. But if you want to get there faster, you're going to need more money being used to buy those assets. How can you get more money? Well, of course, you can spend less money, but there's a limit to how much you can cut back. I mean, at the end of the day, you still need a home to sleep in unless you move into your car. You still need clothes on your back unless you want to duct tape your shoes. I mean, there's a limit to how much you can cut back on, but there's no limit to how much you can earn. So how can you earn more money? Well, one thing that you can do is ask your boss for a $10,000 raise, but do it the right way. Don't just say, hey boss, can I get an extra $10,000? You're going to get kicked out of the room. The way you get that extra raise is by number one, making yourself valuable. Showing your boss why you are a great employee. Number two, going above and beyond. Learning outside of the job, improving your skills, learning about how you can provide more value. Number three, showing that your competitors are willing to pay more money for you. And then number four, if you can get them more money, show how you can provide a better return on your investment to your boss. Meaning, if your boss is paying you $70,000 a year and you want them to pay you $80,000 a year, show them why they are going to get a better return on their capital. How you are going to do better and you're going to make more money for the company because you made the $10,000. If you can make more money for your boss will be willing to pay you more money. That's one way. Or you can work to go out and create your own income. Sell something online, something in person. Do you have a skill? Do you have a product? Do you have an idea that you can monetize? You got to figure out what's right for you. For me, this was building my own business. Briefs Media is the company that I run. I make these YouTube videos. This is kind of like my hobby. But my business, my full-time job is running Briefs Media. And I've spent a lot of time and energy and money working to build and grow Briefs Media. You got to find what's right for you. How can you earn more money? But again, the goal of you earning more money isn't so you can just live in a bigger home and drive a faster car yet. It's so you can buy more assets. So these assets can buy you all those nice things. And then number 5, this one is important. A lot of people completely forget this, but if you really want to build sustainable and real and scalable wealth, you have to protect the wealth by hiring smart people. And this is going to mean a lot of things. If you have a business, you got to hire smarter people than you. If you don't have a business, you still got to hire smart people. Because now as you build wealth, you need people that are smarter than you to protect your wealth. This could be financial advisors. This could be attorneys. This could be tax accountants. This could be estate planning attorneys. You have to have people in your circle now that are very smart and very good at what they do. Now you might say, well, what defines a smart person? Well, there's a lot of accountants out there. Not all of them are good. There's a lot of realtors out there. Not all of them are good. There's a lot of bankers out there. Not all of them are good. There's a lot of attorneys out there. Not all of them are good. I know that because I am an attorney, although I'm not your attorney. You want to hire now smart people. And this is a mistake that I made in business as well, because first I would just hire people that I thought were passionate, but not necessarily smart. And then you realize that that was kind of a fake passion to begin with. You want to find smart people to work with you, to help you build and to help you protect your assets. If you start investing in things like real estate, if you start building a business, you better get yourself a good accountant. If you're investing in real estate, they better specialize in real estate investments. I have lost a lot of money by working with a bad accountant because they were cheap. And that cheap accountant ended up costing me a lot of money. One of the most expensive things that you can do is be cheap. Same with attorneys. I have been through and seen a lot of crazy things in the legal field. You better understand that as you make more money, people are going to try to take their hands, put it in your pocket, and take some of your money for themselves. Protect yourself with a good attorney. What does that mean? Well, you want to start by having an estate planning attorney because everybody's going to die, but having a good will or trust in place is the basic starting point. But then also understanding what are you building and how do you protect your assets. If you're investing in real estate, don't own the real estate in your own name. You could have like an LLC or other type of entity own the real estate. That way it's not you that owns the real estate. Like for example, I invest in real estate, but I, Jaspreet Singh, own 0 rental properties. My LLCs own the rental properties and I own my LLCs. That way if a tenant slips and falls in a property, the most they can take is whatever the LLC owns. They can't come after my personal assets. Because in the real estate space, what they say is if you haven't been sued yet, you haven't been in business long enough. Hire smart people as you start building your wealth. That way not just you can protect your wealth, but you can also grow your wealth. But you need to make sure that these people are good. And if they're not good, fire them quickly. A simple and basic way to understand if a company that you're thinking about investing in is overvalued or undervalued is by comparing these numbers from one company to another within the same industry. So what I want to do for the purposes of this video is I'm going to compare McDonald's, I'm going to compare Chipotle, and I'm going to compare Yum Brands. So let's start with McDonald's.